Hi everyone, welcome to TechCabal Live. I hope you're having a good Friday morning or afternoon, depending on what part of the world you are joining us from. We are glad to have you. My name is Alexander Onukwe. I am a staff writer at TechCabal, and I'll be your moderator for today's event. TechCabal Live is our series of live video conversations with leading figures in African tech. We discuss products, investments, building through tough times. Actually, this entire series started last year, right in the middle of the pandemic in April. And so what do we want to achieve? We want to have engaging conversations about how to build innovative, resilient, exciting companies for the 1 billion people on this planet. So we are happy to have you. And today our focus is on building last mile fintech product for Africa. So that's building products that consumers like you and I will use and that are useful for our lives. To help us break this down, we have Tosin with us. Tosin Eniolorunda is the founder and CEO of TeamApt. TeamApt is a Nigeria-based fintech company. They've been around since 2015 at least, and they've worked with banks and multiple fintechs, delivering financial services to businesses of different sizes and to consumers like you and I. As a matter of fact, if you are a regular fintech consumer in Nigeria, chances are you've used a product that's been powered by TeamApt. Tosin will be walking us through that journey, but specifically, how do you build a consumer fintech company? How do we build it going forward, given all that has happened over the past 1 year? So Tosin, we are very delighted to have you. I should tell you that we've received lots of questions.
Okay.
Yeah, we've received lots of questions, so we are hoping that you're going to deliver a masterclass today. Are you ready?
Absolutely. Let's do this. Thank you, everybody. Thank you, Alex. Thank you for joining us.
So let's begin. Tosin, so because you have an interesting profile as a fintech founder, let me start this way. How do you go from being a product manager at an interesting fintech company like Interswitch to deciding that founding a fintech company is what you want to do? What was that journey like for you personally?
Thanks, Alex. I think I'll share my own anecdotes. My own anecdote is my journey, and people can more or less learn from it and basically draw parallels. Everybody has different journey, but we also generally have similar themes. So, I mean, my entry into entrepreneurship has started from my secondary school days, as is typical for many people. I've always been a builder. I actually started by working with radionic shops, if you know what that means, right? And I did some time as a JETS president in my secondary school, and from there, university days. Throughout my university days, I basically sponsored a part of my time to school by handling projects for people. So that has been my history. So at that time, Interswitch was one of the biggest fintechs. It's still one of the biggest fintechs that was in Nigeria. And if you were really interested in tech and financial technology then, in the mid 2000s, I got an offer through recommendation because I've done a lot of work and just started there. But I've always personally had it at the back of my mind that I was going to do this. But I initially did not have it like to say I really want to go and do my own thing. I just wanted to make impact. And I think that's the first point for my listeners. It needs to start with a desire. And oftentimes that desire is ideally something that is not just related to money. It has to be related to personal and social goals. So my time in Interswitch was interesting, but at the time it became boring. So I had no choice, than to leave, right? And that's how TeamApt was. What Interswitch gave me was the basically, I will always credit Interswitch for giving me some of the necessary baseline knowledge necessary to understand the industry from both technical, product, and business perspectives. So, I mean, it's becoming clearer that technical founders or technical co-founders are becoming needed. So in my time in Interswitch, I moved from being a software developer to becoming a product manager to now finally becoming a business person. And this generally gives you higher chances of success if you're able to see through your business from both the business end to the technical end. Because that's one of the rules of execution. If you have read that book called Execution, by the way, know your business and know your people is one of the key tenets of execution. So I would say my time is one in which I've always had a desire. I thought about spending my time in Interswitch if I could, but eventually I had to leave and do what I was doing. And I am grateful for my history. Yeah.
Okay, so let me see if I can get of your last few months at Interswitch before you left to start TeamApt. What were you gathering in terms of skills and knowledge and network? How did you get the confidence to take that jump, knowing that you are starting a company? I think 2015 we are still having conversations about a recession in Nigeria. So yeah. I don't imagine it was an easy jump for you. How did you prepare yourself for that?
Yeah, I actually thought of spending a lot of time in Interswitch because Interswitch was actually really interesting at the point. I mean, if I had the ability to be able to do what I'm there to do, I probably would have, right? But as time went on, I began to get, agitated. I was approaching my 30s. I was beginning to have a quarter-life crisis. And quarter-life crisis is what is familiar with I'm sure with many of my audience. This is that period in your life that things are hazy. You're trying to get a foothold of a career path for yourself. And oftentimes, if you find an organization that you love working with and you know that it can grow both in compensation, recognition, and skills, oftentimes that mitigates it. But I was struggling there, right? Especially knowing my history being an entrepreneur. Which, by the way, entrepreneurship is not necessary for everybody. That's another conversation for another day. Yeah, entrepreneurs are glorified. Entrepreneurs are seen. People say Elon Musk, see Jeff Bezos want to be like that. My own opinion, it's not for everybody. And not for everybody is not in a cliche term. It's simply from the fundamental reasoning that you need to set an objective in life. And your objective in life will typically revolve around growth and happiness, right? So if you find ways to achieve both, and not necessarily through the entrepreneurship route, I think we all win in life at the end of the day. And the journey of an entrepreneur is also not an easy one. You can see my face, right? Doesn't look like I've slept very well, right? I slept 3 p.m., around 2 p.m. yesterday. I was on a 4-hour call with my team, on some matters. I mean, going back to the question, my last few months were relatively easy because, I mean, it's a decision that you'd have made a long time ago. And it wasn't like maybe I was deliberately trying to gather skills, connections, etc. As a matter of fact, I was not even a business person, so I didn't have the skills nor connections. I think I just knew at that point that this is the time. And I know it gets harder when you get married and you have a child to take certain leaps. So, and I knew also that if I went out to do it and I failed, I don't think my profile would be worse eventually. Coming back to a place like Interswitch or maybe another place will still be an option on the table, even if you have failed. So, I mean, with that reasoning, I was able to take a leap. I mean, if I failed, I was still have come back. I was basically able to, just take that leap of faith. The hustle began.
Yeah. Right. So let's talk a bit about that hustle now. TeamApt started as a fintech company that works with banks. I think in some of your reports, you've mentioned that you worked with up to 16 banks, or was it 26 banks? That's like a very impressive number. So how did you, so firstly, what was the mission starting off? And just for the audience, TeamApt sort of has transitioned in the last 1 year or so. But Tosin, what was the mission initially? You knew you wanted to build a fintech product, a fintech company, but what was the mission? And how did you strategize on partnerships and all that?
Yeah. My mission personally, I find it hard to communicate it, I'll be honest, but my own mission stemmed out from two major objectives, commercial and social. The commercial one, let me get it out there first. I wanted to do something exciting and probably get, some level of money from it also. That's there, right? But it wasn't just enough. At the end of the day, I wanted to also make impact, right? And impact a social-driven mission. Remember I mentioned I had a quarter-life crisis. It impacted on me very, very early on that you need to set a mission and objective for your life. I mean, people find it through different ways. Some people go clubbing every night. I mean, whatever works for you. Some people find it by doing vocation. Some people find it by doing what Alex is doing. He's interviewing me, probably, that makes him happy. So for me, I knew quickly that happiness was important, and it also struck me that helping people find happiness too through their money was important. Remember, I told you I wanted to also make money. Early in life, I quickly knew that unless you're a monk and you have reached some really serious level of enlightenment, which is also hard, by the way, money is important for your happiness. So it's fascinating to me to help people find happiness through their money. But it's a hard goal, especially when you're talking about money. But by finding people easy ways to collect, manage, grow their money, I think you can actually contribute somehow to how well people live their lives. So at the center of this was facilitating financial finance for people and businesses. But young me just left Interswitch. I didn't know anybody. The easiest path for me was to, start with enterprise projects. And that's one of the reasons why TeamApt started by building solutions for banks. That has a benefit of you getting money early on. I actually wrote some posts then about bootstrapping because a lot of entrepreneurs have challenges raising capital. And it's a chicken and egg scenario. You need capital to get growth, and you need the growth to get the capital. So a way to break that chicken and egg cycle sometimes is to do things that are not exactly in line of what you're trying to do, but that will bring in money. And the way we broke that cycle in TeamApt was by going to banks and building projects for them. So the model for that is they will pay you upfront, maybe 50 to 70%, and on completion you get the balance. That allowed us to keep the lights on. We began to think of bigger industries that is still in line with our goal. Yeah.
Okay, so if I get you correctly, the mission was help people have financial happiness. So initially your target was consumers.
Yes.
But you felt you needed to go through the banks. Why was it not possible to go straight to the consumers initially?
Oh, okay. Yes. Yes, that's too, by the way. And so financial happiness for people and for businesses. For a time, we actually thought through ourselves that we could deliver it through banks, actually. We actually considered that if you build terrific solutions, and we actually went to a good level with that. We were one of the first companies that built an end-to-end merchant acquiring system for banks that kind of improved the then nascent POS merchant industry. Up till now, our solution is still used by many banks. So we actually thought for a while that we could, do it through banks. But of course, one of the things that we quickly learned was it's harder to do it through someone else, banks. So that's why the thought about going directly to customers and businesses became stronger and stronger and stronger.
Okay, so just for those who might not know TeamApt very much, because obviously you're not really a consumer company like that, can you explain what you guys have been working on for the past 6 years? What have you built, and how far is it in the system? Yeah.
I mean, you're right. For the past 4 years, we have been, we were servicing banks all along, and more recently, and servicing banks all along meant that we were building solutions that a lot of banks were using, internet banking solutions, mobile banking solutions, merchant acquiring solutions, corporate internet banking. We were like one of the go-to companies whenever banks wanted to, digitalize operations or build cool stuff for their customers. And we worked with literally all the banks. That's our history, right? So between 2015 and 2018, we were doing that mostly. Sometimes in 2018 and middle of 2019, we began to focus on building solutions for customers and businesses a lot more. So in that time, we built MoneyPoint and Monify. I think most people might be more familiar with Monify than MoneyPoint, but MoneyPoint is far bigger than Monify. That's because most of our audience are people that live in tush places, right? So Monify, like you might know, is one of the infrastructure providers that power some of our cool fintechs. When Piggyverse was using Providus Bank, we kind of built some of this infrastructure for them. So many of our fintechs, use Monify as a collection platform through our partner banks. So we kind of provided the infrastructure for that. And also we built MoneyPoint. MoneyPoint is an agency banking provider, one of the largest, if not the largest in the country. In total today, we process roughly 44 million transactions monthly, and about 600 billion monthly also in transactions. Most of them through Monify and MoneyPoint. TeamApt has grown a lot. We have a sizable staff size. I think a lot of people recognize us for our product and engineering prowess. And that's not hard to know. When the MD is a product and engineer, you will not expect less. I have not been a very public person. I've not, courted a lot of media attention, and that sort of, gives us this low-key vibe, which we're hoping to change someday, right? But it just basically points out to our DNA as a company. Our DNA is terrific execution and let people blow your trumpet. So over the years, we have transformed now to become a B2B2C infrastructure provider for merchants and agents.
Okay, so I'm going to come to your numbers because they are quite impressive, especially your 2020 numbers. I want to ask you how you achieved those numbers in the middle of a pandemic. But I want to go back to the services you are providing for banks. Why was it not possible for the banks to provide those services themselves?
Okay, yeah, if you understand the history of banking in Nigeria, if many of you were already quite aware then, in the early 90s, banking had things like tally number, right? Where people would go to banks and, banks are not even connected through in the internet or any form of connectivity. So banking and the banking teams that we have today, the banks grew from that era to a new era in the mid 2000s and the late 2000s that now became digital. Digital bank is now one in which the principal method of servicing your customers are through digital channels like mobile apps, USSD, web applications, and less of physical channels like bank branches. So, but you, however, had a bank that grew from the past of evolving from physical methods. So what you have is a team that sometimes you will not call one of the most tech savvy or tech product oriented teams. And it's not particularly bad, especially because if you look at one of the core focus of banking is financial services, and tech can be seen as an enabler. Some people can see tech as the product, some people can see tech as an enabler. So tech as an enabler strategy means that I know my core business of assets and liabilities. Assets and liabilities means deposits and loans. And I can get technology to enable this my core business. So banks sort of a strategy of partnering with tech companies to enable this, right? Because the way they have grown has not been tech at the center. So likes of TeamApt and some other companies who also did very well for themselves today were beginning to now provide these tech-enabled products for the banks. So to summarize, it's more or less like the history of the banks, so it's one in which they evolved to have tech as an enabler, and they all mostly have this strategy of working with your tech companies to provide this enabling products and infrastructure for them.
Okay, so I hear you say two things. As a tech company, as a startup, you can do two things for banks. You can either be a tech enabler for them, or you can provide them tech-enabled products.
Mm-hmm.
Is that correct?
Yeah, I mean, they're mostly the same, yeah. I mean, enabling them is helping them with tech products. Yeah.
Okay. So the reason why I'm interested is that in my head, banks were like the first consumer fintechs, in quotes, when they started providing ATMs. Some of those things were like the first real financial technology systems we had. And so with the rise of the likes of TeamApt, there's been more collaboration now. But do you feel like they are becoming more able to live on their own again?
Well, to live on their own. Well, I think everybody at the end of the day is in business to grow. And most businessmen that I know will do anything business is hard, by the way, and you mostly do anything to ensure that your company grows. I mean, business is a world in which you, sometimes the market is big enough for a lot of people, but oftentimes the nature of market is winners dominate. That's the nature of markets. So, you can have a natural expectation that most businesses, including us, including banks, will do anything that they need to do to not go down. You are dead. You are dead if you are not growing. There's no world in which you don't grow and you are alive. It's just a matter of time. If you are not growing, then you're dead. So the only way to become alive is to keep on growing. And this just generally means that you need to have a clear strategy, a clear product and sales strategy of how to ensure that you keep growing. This might mean that banks might become more fintech-ish. And this might also mean that fintechs might also become more bankish. And I see that possibility. As a matter of fact, we are aware of a recent announcement by one of the big banks to want to convert to a holding company, a holdco. And what that essentially means is in a holdco structure, you will be able to acquire non-core banking assets like fintechs, which is also in that strategy. So I think it's the way of the world where you grow or you die, right? So, and everybody will do what they need to do to ensure that they keep on growing.
Okay, that's interesting. Thanks for that. So let me come to the more technical aspects of building last mile fintech products. First of all, what does it mean, last mile?
Yeah, all right. Last mile essentially means in the value chain of service delivery, you are the last point of giving service to a customer. Let's use FMCG for an example. We are selling Indomie. Indomie moves from the raw materials to the manufacturer, to the wholesalers, to the retailers, and it's from the retailers that it finally gets to a customer. As you may know, I mean, in business generally, sales and distribution is very important. If you have an awesome product that you can't get to the hands of customer, like, what are you doing, right? So you will need to control. It's very important that you have in the service chain of value delivery. It's very important that you have a good hold and control of the way you deliver service to your customers. And in financial services, the demographics of a lot of customers is one in which their average literacy rate, maybe post-secondary school, some not so educated. There is their look and outlook on life, deeply religious. There's a way they see established institutions, and all these factors generally affect the way they interact with products that are built by big institutions. Also, Nigeria is a massive world, right? It's a massive country, and delivering financial services to every nook and cranny of the country through traditional means like bank branches and ATM is actually quite expensive. So last mile delivery, last mile service provision essentially refers to all the kind of methods, chiefly to the agents, where you can actually deliver services to the customers directly. You can have high-touch approaches like agents. You can have digital approaches like digital banking. But last mile service essentially is colloquially used for scenarios where agents deliver financial services to customers.
Interesting. So let's talk about the high-touch method, the agents. I have been personally fascinated with this agency banking system. In Surulere, there is a laundry service that I patronize, and they now double as a bank because that's where I withdraw my money. Why does it work? Why does agency banking work?
Simple, it's access. I mean, simple access. I mean, if you remember the days that we all used to go and queue at ATMs, long queues, nobody wants to spend time doing it. Everybody wants to just go on with their life, not go and be withdrawing money from one place or the other. And the explosion of agents essentially meant that people could have much more convenient access to cash, depositing cash or withdrawing cash. Those are the chief transaction types. So it's simple. It's just simple access. It's easier for people to patronize agents. And secondly, trust began to grow when people didn't have a lot of choice, because during the pandemic, I guess I'm already getting to the pandemic point now, because you couldn't travel so far, you couldn't gather in crowds. Many people were forced to, patronize agents, and when they patronized and they saw services, some of them became sold to that method. So the growth and explosion of agents, and this is not just Nigeria, these are models that are popular all over developing nations. We know the story of Kenya, we know the story of Ghana. So essentially having a scenario where agents are able to provide easy access financial services conveniently and relatively meant that it was simply just going to grow and explode.
So I agree with you on the convenience point. I never have to queue going to a POS point, but it also seems like there are some trade-offs there. So firstly, you are paying a fee, which it depends on the area where you find yourself. I've been on a trip before, and at the restaurant in Lokoja, I had to pay 1,000 naira to withdraw 15,000 naira. Normally that would be 100 naira or something. So, and it doesn't feel like they are as secure as banking halls or ATMs. So how does that dynamic play out?
Thank you. Yes, it is true. And I think it's a matter of opportunity cost. So while you were in Lokoja, I'm sure you gladly take another option of a bank if it was close by, an ATM if it was close by. So it's an opportunity cost for you. It's more or less like, do I want to spend my time and money, by the way, looking for the nearest bank, or I just want to patronize the service? And I tell you, 1,000 for 15,000 is actually very expensive. It's typically not charged like that. It's likely because that agent they don't have a lot there, or maybe
she was the only one, as a matter of fact.
Exactly. And I bet you if you go back there now, you're likely going to find a lot more people there because they are beginning to have competition within themselves too, a lot of competition. So you would expect prices to go down a lot with the agents also. And while these prices have also gone down, the limit will usually be the cost of capital for the agents in running the business profitably. So yes, it's expensive, but the prices are going down and it is actually cheaper than the alternatives that are available.
What about security?
Thank you. Security is a major point, actually. There are still some demographic of customers that will not patronize agents because of that reason. I was talking to one technician yesterday who kind of, works with high, expensive equipment, expensive cars, but he's a technician. So his demographics is one in which he's quite educated, but he also lives in those geographies. And he was telling me that what he does is he transfers, whenever he needs to withdraw some amount of money, he transfers that money to his son, who now goes to go and use a separate card to withdraw the money. So, and the reason is because he was very security conscious about these important accounts that he owns, and he wasn't keen on inserting it on just any POS or just any points. And that's the trend we have noticed. For larger amounts, people begin to become wary of the agents that they patronize. And agents that have the right brand, that are getting closer to maybe being a bank, maybe they have a big shop that is well set up, begin to actually handle larger value of transactions because customers begin to have some level of trust in them. But I will say all in all, security is something that and trust is something that is gotten over time. I think agents are here to stay. I still think that people are also here to still be circumspect generally. Even people trust banks more than they trust others, right? There are certain amount of money that you not put in certain banks, take it from me, right? Despite the fact that they are commercial banks of the country. So I think that situation will improve, but it will likely not go. Even agents themselves don't have the ability to handle large value transactions because it's kind of really expensive for them. But I think for the majority volume of everyday transactions for both trading and living can be handled securely by agents.
Okay. To the audience, we'll soon come to your questions in about 10 minutes. So start typing them in the Q&A box. Tosin will be taking your questions on agency banking and any other questions you have on your fintech experience. Tosin, just before I leave this agency topic, what do fintechs do to power agency banking? So MoneyPoint is your chief agency banking product, I believe. But
yes,
generally,
yes.
You can speak to MoneyPoint, but also, like broadly, what do fintech startups do to power agency banking?
Yeah. So there are two types of regulations that enable agency income, two types of licenses that enable agency banking in the country. One is the mobile money license. One is the super agent license. Though commercial banks and microfinance banks are also by default allowed to do agency banking. So enabling agency banking is essentially providing first a technology platform that allows agents to be able to do the agency banking services, which are cash withdrawals, transfers, bill payments, airtime, insurance, loans, etc. 1. 2, creating a structure for acquisition and management of these agents also, to be able to handle, support them, manage relationships, etc. Also. 3, building internal controls to ensure KYC compliance with extant regulation. That's another thing that you need to do. 4 is to also build some level of trust with the agents, because now you are dealing with money. Either the money is with you as a mobile money operator, or the money is with your bank as a super agent. So these are all the things that the fintechs need to do to be able to acquire agents. Basically, it means that an agent should not have problems being able to process transactions at every point in time, because this is nobody wants to go to an agent location and say that the platform is down. You basically lose customers. So yes, these are some of the things that fintechs need to do this.
Okay, so give us an idea of the business side of it, just very briefly, if you can. What's the business relationship between the fintech and your thousands of agents? How do you share income and stuff?
Yeah, agents are not exclusive. There's a regulation that says agents cannot be exclusive to anybody. So oftentimes it's on a commission pay-as-you-go basis, where transactions that are being done, agents are charged for those fees. That's the general structure. Agents perform transactions and they're charged for those fees. There can be some scenarios where maybe some fixed fees are paid for. So some fixed fees are being paid for maybe things like insurance, etc. Yeah, but most of the transaction is on the basis of pay-as-you-go commissions.
Okay, all right, that's good. So let's talk digital now. You said you can do high touch or digital on the last mile delivery of consumer fintech. So how does the digital work? Is it apps? Is it bots?
Okay, so yeah, how does the digital work? Digital essentially means that you are delivering financial services through digital channels like a mobile phone, USSD, or web application. That's what digital means. I think it's all about the preference of the customer. Some customers are very comfortable dealing with just digital channels. They are likely educated and maybe comfortable with smartphones and have data subscription, or are comfortable with using USSD channels. Or some customers are also comfortable with dealing with people because they want to be able to hold somebody responsible, right? So the demographics of Nigeria is one in which the middle class and above are typically very comfortable with digital channels. And also the middle class and below, the lower middle class below, begin to get more comfortable with high approach. So it's all about being able to service which of your said Nigeria is largely underserved or unbanked. The most underserved and unbanked people are the lower bottoms of the pyramid. So basically, knowing your customer allows you to be able to target the solution that works for them most for banking.
Okay, I think your voice has your volume has dipped a bit. If you can, yeah, yeah. So on demographics and the channels, I wonder if you could weigh in on this as well. So USSD, it's everybody can use USSD, but is there a typical USSD user? And how much longer can we still depend on USSD?
USSD is going to be a viable channel for the next future that I can see. Simply because of access. USSD is available everywhere, from a smartphone to feature phones. Is available everywhere, and it's also kind of convenient. Recharging your phone is quite simple on it. So I think I can anticipate that USSD will be going to be available for quite some time.
But there are challenges to it, the way it works.
Yes, there are challenges. Some of them are implementation challenges. Some of them are infrastructure challenges. You can assume implementation challenges will get better over time. Infrastructure challenges might refer to maybe things that you can't control as a service provider, like telcos or the person having credits on their phone, right? Or the price also. Sometimes customers are charged for USSD sessions. But I mean, comparing the challenges to the opportunities and benefits, I think it's great. The user interface also certainly cannot match that of a user interface certainly can also match that of a mobile phone, a smartphone, right? But for many of the demographics in Nigeria, this works just fine, actually.
Does it work for the Gen Z? It's a serious question, actually. So because they are the Instagram generation, I believe, and they're more familiar with mobile apps. They're more familiar with swiping, and liking. So does USSD work for them?
I believe so. I have Gen Zs that use one of the most popular USSD in the country, right? But I mean, I will certainly also agree that if you put a mobile phone together, a smartphone application together with a USSD channel, a smartphone would literally beat it in terms of speed, user interface, etc. So I would have biases for Gen Zs or people that I call digital natives, people that were born when the internet was formed. So.
All right. So I have one infrastructure question before I now go to the audience's question, and it's so for TeamApt and for startups that want to build for the last mile, what should your technology stack be? And how dependent are you on other companies? You mentioned telcos. How dependent are you on telcos? And how independent should you try to be?
Yeah. So technology, you can actually use anything, to be honest, right? But you need to have some considerations. The biggest consideration to have is, do you have an expert, or let me say an enterprise architect in your team for that stack that you want to use? You can use anything, PHP, Java, C#. If you like, use Erlang, though I'm going to talk about other things. But the first consideration is, do you have somebody that when things go wrong on that language, on that framework, in that technology, this is the person that's going to fix it? That's the first consideration. Second consideration is, how easily can you get talent for that technology framework? This is the reason why you might struggle using Go, you might struggle using Erlang or Scala, because you might not have a lot of engineers on the field, at least in Nigeria, that are convenient with those technologies. That's second consideration. The third consideration is the maturity of the framework that you're trying to use. Are you the only one that when you do Google search, you will not see anything about it? Or you're going to see millions of records of people that have gone through similar stuff. So when you're choosing a technology platform, from programming languages to platforms, to software, to whatever you're going to use, these three major considerations are very important. The first one is, who is the expert in-house? 2, how easily can you get talents for that platform? And 3, what is the maturity and the support structure like?
And on your dependency on telcos?
And dependency on infrastructure providers. I mean, nobody can stand alone together, to be honest, right? And that's one of the biggest risks that we have in providing reliable services for customers. What you can do is to provide multiple layers of failure, fallback links. Of course, it's going to be more expensive, but you will need to be able to reduce dependency on just one person, so that if one person goes down, you are able to quickly switch to another infrastructure provider and not deny service for your customers. That's the biggest mitigation for such.
Okay, great. So to the audience, we'll now start taking your questions. I can see 6 questions right now. And I see an interesting one about the size of mobile money in Nigeria from Kunle. Adeni, is mobile money really big in Nigeria? Can it really play a vital role in banking the unbanked, especially in densely populated areas that still produce low revenue? And I believe, Tosin, this is an important question because on your website, you talk about financial inclusion. So what do you say to Kunle?
Yeah. Let me draw some data out to give you ideas of how big it is in Nigeria. For card transactions, there is an argument that between 60 to 85% of card transactions, between 60 to 80% of card transactions are agency banking based. A portion of it is web, maybe about 10% thereabouts will be web, and the rest will be ATMs and merchant payment scenario. What I'm saying is, for card transactions, that's either web, POS, or ATM, most transactions are agency banking driven. I think that's one of the biggest indication of how big it is in the country. The alternative to card transactions for payment generally is account transfers. Account transfers, however, don't need to be agency type, and most of the Gen Z or millennials or digital natives will generally also do transfers for payments, right? The comparison of transfers to cards, you can find it on NIM's website. And by the way, a lot of transfers are also due to agency banking transactions, because one of the popular ways people also withdraw money from agents is through transfers. So I can tell you that in Nigeria, one of the things that we Twitterverse or Instagramverse suffer is oblivion to the reality of the non-Twitterverse. Just take a trip to Ibadan or take a trip to Ota and just see everywhere. You're going to see one shop, one umbrella with somebody putting a signboard of POS out there. Guys, it's actually big. And that's the reality of the average Nigerian, right? If I want to take the second one, is banking system in Nigeria really advanced compared to other banking systems in the world? Absolutely. Nigeria has one of the most fairly advanced banking systems in the world. One of the biggest wins for Nigeria is instant transfers. See that ability for us to transfer money from one account to another and let it reflect instantly. Some of the most advanced nations don't even have that, and they're just getting it more recently. The vibrancy of the tech ecosystem, the quality of people there, the execution there. Another indication is in Africa, in a country like Ghana, there are three classes of banks: Ghanaian banks, international banks, and Nigerian banks. Apart from South Africa, if you want to see the growth of banking across Africa, Nigerian banks are one of the most perverse banks. The likes of GTBs, First Banks, UBAs, Zenith. You don't have a lot of other banks in having such an expansion, maybe aside East Africa or maybe South African banks also. So I can tell you categorically that banking in Nigeria is fairly advanced commercially and even technology-wise. Yeah.
So there's a point in his first question that I want you to address specifically, which is about densely populated areas that produce low revenue.
Yes.
We assume everybody wants financial services, but does everybody want to be banked? And specifically, how relevant is mobile money in those densely populated areas?
Okay. How relevant is mobile money? Is quite relevant, actually. Which I don't understand what the low revenue part means, please. I think if you can explain that a little bit more. Yeah, but let me talk about.
So people who are not.
making a lot of
money. People who are not very well to do, people who are not in Lagos, yes.
Absolutely. Okay. Yeah. So yes, it is actually very, very relevant. In fact, it's one of the most relevant places. A combination of dense population with low access is it automatically means need for agency. Dense population, low access, which means banks and ATMs are far away from them, means an explosion of agency in those places. And like I've mentioned earlier, it's simple, it's access. Why do I want to spend 100 naira, 200 naira taking bike to the nearest ATM and spend 10, 15, 20 minutes on the queue when I can give that same 200 naira to one agent somewhere to withdraw that same amount of money? It just makes sense to do that. Right. So it's cheaper for you in the long run, actually, in terms of time and in terms of money to patronize those agents. And often also agency business is a volume business, right? So you might not make 1,000 naira from 10 people. Rather, you make 100 naira from 100 people. So that is how agents get profitability. It's in the volume of people that visit them daily, and they charge relatively small amounts of money. That's how they are able to survive.
Okay. There's a question here about whether you rate the agents. How do you make sure that the agents are top quality? If I go to Onisha, for example, and the agent wants to, quote unquote, not give me my complete money, how does the system make sure that such agents don't remain in the system, so to say?
This is first of all see the way Nigerian and police agents themselves without money points. This is the jungle, right? And people don't smile on the field. If an agent is known to have sharp practices, that agent is dead. Your reputation is actually one of the major reasons for your existence and your growth. It's similar to the way drivers talk about filling stations. Hey, their fuel is good in this place. Their fuel is bad in this place. The meter is bad here, or they sell bad fuel here. So agents also have street credibility, and you don't want to mess up your street credibility, and otherwise you're dead. That being said, we also have policing systems. We get reports of sharp practices from agents. We usually work with some of the law enforcement agencies in bringing those agents to justice. We have regular communications with EFCC, state departments, state police departments, who often work in collaboration with us to have some of those agents in custody. Most of the issues, however, are customers themselves that come to perform fraud on agent locations. One easy one is you steal your dad, mom, wife, fiancé, husband's card, and you simply go and withdraw cash with it. And they trace it to that agent. And so it's a common one, for example, that leads to a lot of trouble for agents. But all in all, we have systems in-house that basically allow us to be able to police agents and recover whenever we need to make recoveries.
Have you ever been called to the police station to come and separate a fight between an agent and a customer?
I have hundreds of cases, but I have a team, however.
That's interesting.
Yes, they just call Mr. Tosin, they just call you and it's you have hundreds of court orders that come quite often. It's what you should expect when you're handling such a scale. What you need to ensure is that you have an adequate control KYC process to assist all forms of investigation that come to your organization to bring perpetrators to justice very quickly. But I also have a legal compliance team that deals with many of those cases.
Okay, thanks. Jeremiah has An interesting question here. When starting out in fintech, should you target a small concentrated market or a large market?
Good question. I would say it depends. Small concentrated markets have the general tendency to have a lot of strong lobbying participants. An example of a small concentrated industry would be oil and gas, for example, right? It's a small industry, but highly concentrated. Maybe one deal is $10 million. Another one is going to be a large industry, let's say consumer industry, that's not so concentrated. They all have their merits and demerits. And the general thing is a large industry for consumers is generally going to be more expensive for you to start out with. That's one consideration. But what growth hacking means is for you to find ways in which you can reach your growth without necessarily spending inorganically. Small concentrated industries means that you will need to know people, and it's not impossible that you might need to do a lot of lobbying. So it depends on what kind of capital that you have. Do you have human capital or you have real capital? The thing with human capital is it can easily be built. Don't let me say easily, but it can be built. When you have the right drive, when you have the right grit, when you don't mind going to somebody's church on Sunday, when you're a Muslim, to go and meet him there and just pray with him, or you go and play golf with them, and you can build your capital that way, and you will not be seen as an outsider. So I would say it depends on what you have and what products. I personally, in the beginning, I would say I went more in the direction of enterprise, which is small concentrated, because it was kind of just easier and money was upfront. But you also have the like of Calendly that started out with a consumer market and hacked growth out of it. So I would say it more or less depends on what you have that you can use to go for you. My bias, however, is that a small concentrated industry can allow you can grow in a small concentrated industry without needing a lot of capital. That would be my bias.
So I have a question about human capital. You mentioned how and somebody sent this question actually. You're not building your fintech alone, even if you were the product manager at Interswitch. You need people. So how do you attract the right people to your team? How do you screen them? How do you make sure they are not people who are just coming to get 3 months experience and go and build a competition to you immediately?
Good question. I especially when you don't have a lot of money, I think you need to first of all be lucky with people that will buy into vision. And what people see, vision essentially is you painting a vivid picture of what the future may be, together with what they need to do to get there. So generally, young people can take risks with you. If someone is still in Nigeria, a male or female, still less than 30, they will still generally want to take risks with you. So you might actually be lucky in convincing people on the strength of your vision and the fact that maybe you have built a relationship with them over time to be able to convince them to come and join you in the beginning. But the point is that the ball is rolling from them, because a lot of people, you can have different reactions. Some people will say, you know what, I'm going to be working with you by the side. I'm going to be working with you by the side. Or some people will be telling you that, okay, don't worry, I'm going to join you. Or some people will just ignore you totally. But you might need to just convince that initial set of people. Now, when you're convincing people, you need to find generalists. This means, let's say you are looking for a product manager now. Ideally, this product manager should also be a growth hacker, for example, somebody that can also perform sales. And being able to find those people is an eternal job that you're always going to be doing as a business leader. Recruiting does not stop at all. It only even gets harder as you go. So what I tell people sometimes is that your ability to be able to start up is often a screen of who is going to succeed in business. because it's not your ability to not get the people. It's simply the fact that you did not succeed. It's simply because you did not get those people that you did not succeed. I don't know if you get my logic. So to summarize, getting people to join you in the beginning is a combination of vision and you can also begin to find other things like equity. But for me, I think I also found it easier because I came from a base, right? I was somewhere. I had built some reputation in the minds of some of my co-founders who found it easy to trust me and also bring in people that they also trusted. So, I mean, sometimes working in a place where you have built relationships can also help you find co-founders, or partners. Generally, you meet people through school, through where you have worked before, or through associations that you have all done together. Those are some of the places. And the more experience that you have had in such, school is cool. Nobody has experience in school. But from work, you start getting experienced people and other associations. So that's how you can find people.
Okay, so we're still taking questions from the audience. There are specific questions about what your failure rate is at Monify and how you resolve chargeback issues. It might be important to just touch on this because this person might be a small business.
Chargeback is one of the biggest internal problems currently. Yeah, so that's a very good question. We have techniques for resolving this today. The problem of chargeback is problem that is the fact that it denies a customer value at that moment. Imagine a scenario where you travel all the way from Kano to Lagos to buy, or Lagos to Kano to buy RAMs, and you want to withdraw 1 million naira to buy those RAMs, and you put that card in your POS, and it says wait 45 seconds, and says issue or switching operating. 5 seconds after, you get an SMS on your phone. Debit alert. You traveled all the way to Kano to buy goods. Now you don't have money, you don't have the RAM. What do you want to do?
Exactly.
It's actually a very, very serious situation. And I mean, one of the reasons why this keeps happening is because of the infrastructure of many of our transaction processors and issuing banks. Some of this infrastructure needs to be improved to be able to handle transaction throughput better, right? Well, we have ways in which we manage that. We have proactive systems that will at least enable us to be able to credit a customer without going to their bank.
Right.
Yeah, so as early as under 24 hours, less than 24 hours, the next day, you can actually get a credit directly in your account. Get without needing to go and complain in your bank. That's one of the things that we do to manage that. We are working hard to reduce that turnaround time.
Okay.
There are several things that we need for that to be able to happen, like maybe certain upgrades that our processors need to do, our banks need to do, to keep that turnaround time to be far less. Maybe the day where to be like 30 minutes or 5 minutes or 1 hour will be available. But today is one of the reasons why our agents trust us, is because we find ways to proactively resolve some of these issues whenever it happens. That's one of the reasons they trust us.
Okay. So I know we're talking about building fintechs and building products, but there is an interesting fundraising question here, which is, what's the biggest thing that Africa-focused VCs and investors are missing? And let me make it specific to fintech. What's the biggest thing they're missing about fintechs that are building for consumers? Because we typically say that anything you're building in Nigeria is competing with food. And so the market is probably small. But what are the VCs not seeing about the potential in the market?
Yeah. Good question. So the space in Nigeria, the VCs space in Africa, I would say, still nascent. There are still a lot of genuine risks for VCs in the continent. You have political macroeconomic risks that needs to be faced. There are also some ingenuine ones like perception, right? And investment is a social and is an art as well as a science. A science in that there are known methodologies for valuing an asset for you to invest, and an art because a lot of value that is placed in a company is based on perception that has no scientific basis. So one of the problems that we have in Africa is perception. You have similar companies that just the same fact that they are not in Africa or not Africa based will command value up to times 5 times 10 of the value that you will command because you are based in Africa. And it's because of the perception of the fact that it's Africa. That's one big problem that we all face. Another thing is lack of understanding of the space. The people that understand the space deeply, not on a superficial level, because a lot of investors go with trends, signaling, and optics, right? I hope you know what that means. A lot of investors go with this kind of directions. Yeah, but that is not what makes a business grow or succeed. Businesses grow or succeed on typically more fundamental reasons like competitive advantage, uniqueness of offering, first to market advantage, strength of the team, and execution. So a lot of lazy investors now begin to focus on signaling. And sometimes it's just simply because people that have those fundamentals generally also find a way to now get those visibility, right? But sometimes it's easy to be faked sometimes, right? You heard of story of some of the electric, is it Rivian or something like that, that was basically faking the whole thing until he made it, or Theranos, right? Some of these things
Theranos,
yes, it can be faked. So in Africa today, people still don't understand the space as much. So you have them being circumspect and pulling back, and will now finally be relying on signals when your signaling begins to show that you are going to be an interesting fintech. So that's another problem, another issue that VCs also have. So I've talked about the multipliers, the value and perception that Africa has. I've talked about the fact that some of them don't understand. Number 3 is we still don't have enough of them. And that leads to situations where a lot of companies are still struggling to get attention and get funded. I will agree that it's getting better now.
Yeah.
Exits, at least there's one interesting exit that we all love so far.
Yeah, one has ended stripes.
Yeah, exactly, that we all love so far, and that's very good signaling again for the industry. But still, I still think that compared to the availability of funding in other countries, you still have a comparatively lesser amount here, and which I mean is also going to be an opportunity for whichever VC decides to begin to pitch their tent here. I think those are some of the challenges that we all face. They all face in this industry. Yeah.
So let me wear a partial VC hat and say that one of the challenges is regulation. I mean, we are 20 or 21 days into the new CBN regulation about cryptocurrency. And so VCs have a good fear, they have a good reason to fear regulation and uncertainty. So there's a question here about how you think about and manage regulatory risk in Nigeria and in Africa broadly.
Yeah. Well, I mean, I think, maybe I'm one of those maybe I'm uncommon, but I kind of think that regulators generally still make, financial fintech regulation, I don't know about other regulation, is still generally making prudent decisions, in my own opinion. I might be wrong, and I'm sure there are many people that want to shoot me here. My own opinion is that I think the regulation is still making prudent decisions. However, I think our regulation need two more things. One is more education on what's ongoing, and two is method of delivery. I kind of think that those are things that we can work with our regulators to achieve. And I think one of the best routes to achieve both is for us to all come together as fintechs and form a group that can allow the regulators to be able to address us easily. If we don't form such a group, regulators will not have a way to bounce ideas through us. Neither will regulation have a way to be able to understand trends and things that are ongoing. There's a bankers committee today that is essentially an association of bankers that the CBN engage for policies, and they also are sort of like a pressure group for banking in the country. I don't know of any legitimate, by legitimate I mean one in which most of the major fintechs are present and well represented and engaged in the country. I and my friend GB, Flutterwave, we talked about this recently. I'm hoping that we can more or less come up to something that will allow our regulators to be able to bounce things with us, allow us to be able to communicate things with them also in a unison. And I think that that's one of the biggest things that we need to do to assist regulation.
You and GB are launching a fintech cabal, I hear?
Nah, I just said we were talking about how to handle, how to, present ourselves better to regulation. Alex, I didn't say.
Right, no problem. Yeah, I heard you. Don't worry. Don't worry. So we have a poll for the audience to know how well you've been following this conversation. Please answer the poll. Just 3 easy questions, and we'll share the results shortly. Tosin, let me ask you, how did you know you arrived at product market fit with Modify and MoneyPoint?
It's not hard traction. Product market is not so hard to find. It's simple traction. You launch it, people want it, and people begin to knock your head about things that you are not doing correctly. That's simple. The moment you get the product and people are wanting it, and you are under stress to change it with the way people want it, you achieved product market fit.
Okay. There's a question, what other products are you looking to build for transactions? And let me just expand on this question. What other kinds of innovations should we expect on consumer fintech? We have lending, we have payments. What else can we expect?
I think the next direction will be proper access. There are still a large portion of Nigerians that still don't have bank accounts or have bank accounts that they're not using very well. So I think the next one is access, improving access to them. 3 is, I think you're going to get institutions that can bundle services in a cleaner manner. It's similar to what the likes of Monzo and Revolut are doing, where they have a KICAS product that works very well. So the expectation in financial services banking is our products that basically improve access and improve generally how people deal with their money through a far better product.
So now that you mentioned Monzo, let me ask you, and when we are starting, you mentioned that you have commercial and social goals. Don't you want to build a bank and make money? And make like serious money?
If I want to build a bank, it's not to make money, trust me. The margins in banking is really tiny. You go and ask your bankers. For you to make money in banking, you need to build it at some serious scale. If I'm going to do anything that is going to be if that's going to be related to banking, it will just be out of the social goal to ensure that people have, deeper financial access. I know the money will also come certainly though. These are thoughts that we're all thinking about, bouncing at the back of our minds. That is there a way in which we can improve people's access to financial services? So yeah, I'm sure that if we make such decisions, you'll be one of the people that will hear first.
So we should keep our fingers crossed.
Yes, keep your fingers crossed.
Okay. But I'm going to need you to be more specific about your future plans. You have pivoted, you have transitioned to become more consumer focused. What's the future for you 5-10 years from now? What kind of company are you going to be? And what kind of ecosystem also are you expecting, 5-10 years from now?
From 5 to 10 years, we're likely going to be a foreign listed or part of a major financial group company.
Sorry, foreign listed, you mean IPO?
Yes, an IPO.
Interesting.
Foreign listed company that's part of a far larger big tech financial group, delivering financial services to Nigerians and likely 4 more countries. That's the basic framework that you should imagine 5 to 10 years from now. We are working hard in that direction. Our operations are expanding already outside the country, and we'll make announcements this year. We are also improving our products, looking for complementary services beyond agency to allow people to have more access for financial services. Subject to regulatory approvals, loans are going to be launched. Subject to regulatory approvals, products that allow people to be able to, especially underserved, to be able to access their money better will also be launched in both Nigeria and outside Nigeria also. So you can imagine a TeamApt that is going to be either listed or part of a big tech in 5 to 10 years.
That's amazing. That's amazing. So we're gradually coming to the end now. We can see the results of our poll. The first question, when was TeamApt's Series A raise? Majority of the audience says 2018. What's the correct answer, Tosin?
We announced in 2019. Raise actually. So everybody that 2018 and 2019 will be correct.
Will be correct, okay. The second one, how many transactions does MoneyPoint process monthly? Most people think it's 40 million.
That's correct.
That's correct, yeah. And how many financial institutions did you work with as of 2017? Most persons say 26. I believe that's correct as well.
That's correct.
Okay, great stuff. So let's take one last question, which is about open banking. Just very briefly, we have a lot of people coming and doing things in open banking. Where does TeamApt figure in that space?
TeamApt is one of the early open banking. We are a supporter of open banking. We think open banking will actually improve the industry as a whole, reduce the friction of building innovative financial services, and basically just generally improve the life of the customers. So that's where we stand. We are a very strong supporter of open banking, and we're actually part of the Open Banking Consortium.
Okay. Do you consider some of these companies your competitors?
I mean,
in that space, in the open banking space, I mean.
The open banking space. Well, I mean, not directly. First of all, they are mostly my friends, at least personally. And then commercially, not yet. I don't see them as competition yet. Maybe they are planning things to compete with us, who knows. But I'm not someone who I don't despise competition. I think competition generally makes you better. And the best man should generally win. But no, currently I don't consider them my.
Okay. So we have like 5 more minutes. What are your concluding thoughts? Where is fintech headed in Africa and in Nigeria? And yeah. So are we getting any closer to Silicon Valley?
Oh yes, absolutely. Absolutely. I mean, I think in about 3-4 years, you are going to see unicorn fintechs out of Africa, most likely Nigeria. Absolutely. I think we're getting close to that. I think fintech has the ability to be able to transform the country. I mean, don't let me say transform, improve the country. From both, like I've said a lot, providing access, improving GDP, facilitating employment, creating high technology that can be exported. These are some of the various contribution of fintech to the economy. And, fintech is basically also standing on the shoulders of some of the grandfathers of banking in the country. And I mean, you can already see the parallels.
Yeah.
The likes of UBA being present in multiple African countries, GTB, First Bank. So you can more or less draw that fintech guys are going to stand on these shoulders and also continue and keep on doing that touch. That's the expectation that you all have for fintech in the country.
Okay, and so with that, we come to the end of today's TC Live. It has been very educational for me personally, so thank you very much, Tosin. I truly appreciate your sharing your experience with us, and I hope for the audience it has been good as well. Our next TC Live will be on the 5th of March, so expect another interesting, engaging conversation with a leading authority in fintech. I believe there should be a poll in one of the chat rooms, so please help us. It's a survey, so help us fill the survey so that we know how to improve the next edition and subsequent ones. So we invite you also to check out our product. TC Insights is our research and intelligence. And if you need data on fintech, on agri-tech, on health tech, we have reports on the website, as a matter of fact. So check out those reports. And if you need custom reports, do reach out to us at our various channels. And also subscribe to TechCabal Daily. It comes to you every weekday by 7 a.m. West African time. That's the link there. So if you're not already signed up, which I believe most of us are, but make sure you sign up and share as well. All right, thank you everybody for joining. Hope you have a wonderful weekend. Thanks again, Tosin, and to the TeamApt team. See you all next time. Bye.